Welcome to the DX Today podcast, your daily deep dive into the AI ecosystem. I'm Chris, and joining me as always is Laura.
Thanks, Chris. And I have been waiting all week for this one because the story finally moved out of software and into the physical world, where mistakes have weight and things actually fall over.
That is a good way to frame it, because almost everything we cover on this show lives inside a data center somewhere. So what happened yesterday that pulled us out onto a factory floor instead?
Yesterday, on August 24th, the robotics business inside the Chinese electric vehicle maker XPeng announced it had raised more than $900 million in its very first outside funding round, which is an extraordinary opening number.
More than $900 million in a first round is enormous by any standard. So give me the valuation that came out the other side of it, and tell me whether that number is being taken seriously.
Post-money, the robotics unit is now worth more than $6.3 billion, and the company is calling it the largest single-round private financing in China's embodied AI industry, which as far as I can tell is accurate.
I want to slow down on that phrase, embodied AI, because I think many listeners hear it and quietly translate it into the word robots. And I suspect there is more precision hiding in there than that.
There is, and the distinction matters enormously. Embodied AI means the model does not just produce text or pixels, it produces torque, balance, grip, and consequences in a room that is full of real objects and occasionally real people.
Tell me who actually wrote the checks here, because in China, the identity of the investors often tells you as much about the underlying strategy as the headline number attached to the round ever does.
The round was led by IDG Capital, along with Gaurong Ventures, and then two enormously strategic names came in alongside them, Tencent and Alibaba, and neither of those is a coincidence in the slightest.
All right, let's get concrete about the machine itself. What is actually inside this robot that justifies a $6 billion valuation before a single unit has shipped to anybody who is paying real money for it?
The robot is called Iron, and the specifications are genuinely serious. 76 degrees of freedom across the whole body, and 21 of those degrees of freedom are packed into each individual hand on its own.
What about the brain side of it? A body with that many joints needs an enormous amount of real-time computation just to keep itself upright, let alone to do anything a human would recognize as useful work.
3 of the company's own Turing chips, delivering a combined 2,250 TOPS of compute, all of it running on board the machine rather than streaming decisions from a server farm somewhere across the country.
On board matters more than people realize, because a robot that needs a network round trip to decide where to put its foot is a robot that falls flat on its face during a routine network outage.
The structural choice is interesting too. They are using a proprietary, fully enclosed, flexible lattice, which is an elegant way of saying they hid every wire and gave the machine something that behaves like an actual skin.
Now here's the piece I find most strategically interesting about this whole deal. This is not a robotics startup that appeared out of nowhere. It is a division sitting inside a company that already builds cars at real scale.
That is the entire thesis, honestly. XPeng is applying automotive-grade quality standards in its existing electric vehicle supply chain directly to robot manufacturing, and that combination is a genuinely rare advantage in this particular industry.
Explain that advantage in practical terms. Because a skeptic would argue that a car and a humanoid robot share almost nothing beyond the trivial fact that both of them happen to contain batteries and electric motors.
The skeptic is wrong about where the difficulty actually lives. The hard part is not the design, it is supplier qualification, tolerance control, defect rates, and warranty logistics, and an established car maker already has every one of those muscles built.
That word scalable is doing a tremendous amount of work in that sentence. What is the actual timeline they are committing to publicly? And how binding does that commitment look when you examine it from the outside?
Mass production is targeted before the end of this year, with the first units deployed into their own retail stores and campuses, and then commercial deliveries in China and overseas markets beginning the following year.
Now I want to introduce the tension in this story, because there absolutely is one, and it is sitting right there in the parent company's stock chart for anybody who bothers to go and look at it.
You mean the fact that the core vehicle business has had a brutal 12 months, with shares down by roughly half, while the robotics arm is now valued at nearly the entire market value of its parent?
I suspect it is honestly both at once. Let's widen the lens, because this round did not happen in isolation. There was another very large embodied AI financing event just a few days earlier.
Right, the robot maker Unitree went public on Shanghai's Star Market last week, Priced at a $9 billion valuation and raising roughly $900 million in the offering itself before trading even opened.
I understand the debut did not go quietly at all. What actually happened when that stock opened, and the public got its first genuine chance to put a price on a humanoid robot manufacturer?
It rose about 460% on the first day of trading, which pushed the market value to somewhere around $66 billion, ahead of household names that people have followed for decades.
Okay, so now give me the number that keeps everybody honest. What is the underlying business actually producing in revenue terms? Because a $66 billion valuation implies something genuinely enormous sitting underneath it.
Last year, the company did about 1.7 billion yuan in revenue, roughly $252 million, with a profit of around $89 million, which is real money but is not remotely enormous.
So the market is paying something north of 200 times revenue for what is fundamentally a hardware company. I want to be fair here, but that is a valuation that assumes a completely different future business.
The analysts noticed too. One major bank warned that the current humanoid shipment upcycle is unlikely to be sustained without significant improvements in the underlying models that are actually driving these machines around.
So the real bottleneck is not manufacturing capacity at all. It is that the machines are not yet smart enough to be worth buying twice. Which brings me to what happened in Beijing this past weekend.
A humanoid robot ran 100 meters in 9.39 seconds, which is faster than the human world record of 9.58 seconds, set back in 2009 and untouched since.
And the entire internet spent a full day declaring that machines have now beaten the fastest human being who has ever lived. Tell me what actually happened in the few seconds after that race ended.
Both of the record-breaking machines crashed straight into the stopping mats at the finish. One stumbled into the sidelines and spectators had to move, and the other collapsed completely and was carried off on a stretcher.
A stretcher for a robot. I want that image preserved forever because it captures the gap between the headline and the actual engineering far better than any analysis that either of us could possibly write.
The winning machine came from the Beijing Humanoid Robot Innovation Center, and the runner-up came from Honor, which also won the Humanoid Half Marathon in 50 minutes and 26 seconds and hit a peak speed of about 14.5 meters per second. To be completely fair to both of them, the progress curve here is legitimately astonishing over a single year.
Give me that curve because I think the year-over-year improvement is a far more meaningful data point than any comparison to a human sprinter who was never the relevant benchmark in the first place.
The winning robot ran that same distance in 21.5 seconds a year ago, and it now runs it in under 9.5. That is more than a doubling of speed in 12 months.
So the question I actually care about is who is shipping units, rather than who is winning races. When we compare what the best-funded Western humanoid companies delivered last year against the Chinese manufacturers, what does that honestly look like?
Two of the best-funded American companies each shipped roughly 150 units last year, and one of them still carries a valuation of about $39 billion. Unitree alone shipped more than 5,500, and another Chinese maker passed 10,000 cumulative units by March.
That is not a gap. That is an entirely different category of activity. And what about the company that has made the loudest public promises about humanoid manufacturing at genuinely enormous scale?
As of the middle of this year, there was still no publicly disclosed verified production unit, roughly 18 months after the projection that thousands of those machines would already be operational and working.
In fairness, that company's own chief executive has been unusually candid about the reason why. He described the robot as the single hardest product his company has ever attempted to scale in pure manufacturing terms.
He said everything on the robot is new and there is no existing supply chain, which is exactly the problem. And it happens to be exactly the problem that an established car maker with a robot division does not have.
So the whole XPeng thesis clicks neatly into place. The scarce resource is not the model or the mechanical design. It is the boring industrial capability to make thousands of identical, reliable, serviceable units.
There is one genuinely encouraging Western data point that I do want to give proper credit to because otherwise this sounds like a completely one-sided story, and it really honestly is not one.
Please do, because I think the honest version of this conversation has to include the cases where these machines are already doing real work, rather than simply running in circles for an assembled camera crew.
At a German automotive plant, one humanoid logged more than 1,250 operating hours, moved over 90,000 parts, and contributed to more than 30,000 vehicle assemblies across a span of 11 months.
Now that is a number I can genuinely respect because operating hours and parts moved are the metrics a plant manager actually cares about. Nobody on a factory floor has ever once asked how fast the robot sprints.
That is the sentence I would put on the wall of every robotics company on Earth right now. Sprint times are a recruiting tool and a national pride exercise, but operating hours are an actual business.
Capital has decided that physical AI is the next frontier, and it is pricing that conviction very aggressively, while the actual shipped volume remains concentrated almost entirely inside Chinese manufacturing capacity.
That is accurate, and I would add exactly one thing to it. The valuations are being set by the demonstration videos, while the durable value will ultimately be set by whoever survives the warranty claims.
What would you personally be watching over the next 6 months as the signal that separates the real programs from the very expensive science projects that happen to have excellent public relations teams behind them?
3 things. Whether mass production genuinely starts before the end of this year, whether anybody publishes uptime numbers instead of highlight reels, and whether export restrictions start reshaping who is allowed to sell where.
That last one is badly underrated, and I'm glad you raised it because a robot company that depends heavily on overseas revenue is a robot company that is exposed to policy risk it cannot control.
Exactly. And roughly 45% of Unitree's revenue came from outside China, with close to a fifth of the total coming from the United States alone. Analysts have already warned that a robot import ban would noticeably dent that growth.
Well said, and the thing I will carry out of this conversation is the stretcher. A machine that outran the fastest human being alive, and then immediately needed to be carried off the track by people.
That is the entire industry compressed into a single image. Chris, astonishing capability wrapped around a robustness problem nobody has solved yet, funded at a valuation that quietly assumes both halves are already finished.
That's all for today's episode of the DX Today podcast. Thanks for listening, and we'll see you next time.